Hey folks, Gary Dean here with Sentiment Timing, and this is our technical video report for Sunday, March 29th, 2026. So these markets are they're pretty ill right now, and Friday was a really, I mean, the last couple weeks have been a pretty much a perfect storm for the bears, meaning that we have all this chaos going on in Iran right now. We have the Congress, well, we have the this Senate has, they're not approving the bill. We have TSA lines. You have the Homeland Security not funded. And then on top of that, we have this liquidity crisis. And that's really, I think, the biggest issue right now. And it's not getting a whole lot of attention for the stock market. We're getting a lot of attention with the whole credit market on it. But the thing is that you have BlackRock and Blackstone, two, enormous companies, and they're getting forced to liquidate. And the reason why you have people looking for redemptions, they capped it off, and now what that does is sends up a red flag to everybody else. So now what they're starting to do is liquidate stuff. And when you put all that together, this is what the last 5 weeks have come to. Really, the Bulls have had a really hard time getting anything going. It's been for a couple days. It's been a big short squeeze, and then rolled over. Do I think it's going to last forever? No, I don't. I believe we're at the later stages of this. And once it does, I think you're going to see everybody shorting the market because they're going to anticipate that we're heading into a new bear market. And I just don't see that happening right now. But let's just take a look at some what's going on through the eyes of the matrix here. So this is the spiders on a 4-hour chart, because what we want to look at is let's just say that we have a couple more weeks of this and we get things get bear ugly. Well, what we're doing, we're just looking from this pivot here up to the top pivot for our anchors, and that's saying that we have support for the spiders that our primary accumulation. That's from the 593 down to 569. That's a lot of points from where we are right now. So it would be saying that we have another 300 points to the downside. Now, again, that's if things get bear ugly. I just wanted to give you, this is where the expectations would be. But the thing is that we have liquidity that's coming. It's been going down with the market. We're looking like we're getting a little bit of buying right here. We don't we You can see we have buy signals here. We had a buy signal here with liquidity, but that really the panic selling overdid the institutions that were buying. But as I said, typically they're not wrong for that long. So if we see some kind of buying, most likely we'll get a rally back up to the 663, somewhere in that range, where that seems what it's been doing. We've just been retracing these moves. So I have that in place down there to look at. So let's just move a little bit, zoom in a little bit. So we have a gap right here, 644. Makes sense if they came and closed that. We have another gap here at the 655, and then we have I'm not sure if that's a gap right there, but anyway, there's a lot of gaps to the upside right there, and we don't really we have not really anything that I can pound the table saying that we're going to have a big rally starting early next week. It might, but the thing is that there's just nothing that's really showing us. But again, this is a 4-hour chart, and I just really wanted to show you where support was if things got bear ugly. So now let's take a look at an hour chart, because this will give us a little more information, because it's a little bit tighter than the 4-hour chart. And this is, again, that stands out. Look at liquidity it's been doing. It's been heading up the entire time this has been going down. And we got a couple buy signals right here on our divergent indicator. And right now we have full duration on the hourly chart. So to see a rally come back up somewhere into the 660, maybe even it's somewhere up into these areas here. Let's say closing this gap or up here in the not so distant future would not surprise me. And again, that's just going off of what institutions are doing. It's not wishful thinking. I'm just looking at what the institutions are doing here, and they've been buying. So typically, when they're buying, you don't have it doesn't stay wrong for that long. So what would we be looking for as far as a target? Well, let's go to the 15-minute chart, and this is going from I believe it's this. Let me do another measure real quick. So let's just say it's from here. I actually from here. This was the top on it, and we have 159 bars. So let's see where we are on it. This 159. I think it should be right around the same. Let's take a look though. Yeah, it didn't move at all. It's the same hot top. So our targets would be right now. We closed at 634. Really the target would be 648, 651, and that's coming just from this, this top from here to this bottom. You can see we got a buy signal at the end of the day. We have this is the part that has me saying we need to expect some kind of move like this, because last time we saw that was here when we were dropping, and it was just all buys the entire time down, and then once we had this spike up, that's when the selling started. So again, here we are looking at buys going, they're just accumulating this entire drop right here. If they spike up and we come up somewhere into our distribution zone, they'll probably be selling again. But what I said, like I said, I don't believe this is going to, we may have another couple weeks left of this stuff, but I just don't believe that we're heading into a bear market. This is everything retraces. That's one thing you have to keep in mind. And we've had a rally from on the spiders that went from basically, we could even say from this low. I guess this was. Let me see the date here. This was the the 25th April. So that was this is the tariff tantrum. So we pretty much went straight up. So this is retracing right now. As I said, everything is going to retrace no matter what. So maybe we do have to come down here, but it doesn't, it doesn't mean it has to. It just says this would where it be. But once we're there, I mean, this is to me just a retracement before we make new highs again. And I do believe that's going to happen. I don't believe that we're in anything that's a long term structurally wise. So let's move on to IWM here and see what's going on, because it's kind of crazy because IWM is actually holding up better, even though it's been having some massive days to the downside. Using our pivot here on this was November 20th. So let's go back to the spiders on the hourly chart and go to November 20th, because that will give us that should be right here. Yep, this is it right here. So we're already below this pivot on the with the spiders, and IWM, it's still holding up on it. So right now we haven't even gotten through the secondary of the of our accumulation zone right there. So if we head lower, we want to keep an eye on this 238.27. You can see liquidity was going down with price, but we're looking like we're getting some buy. Here's you can see we got buy signals right here on the IWM, even though towards the end of the day we got this drop. But right now, we're seeing there is accumulation going on, even though, like I said, we actually this was the low on it, believe it or not. So this was the low on that part. We're not really seeing selling. So if we see the IWM break above this 252, that's when we're looking at probably coming up to the 257. I think we'll come up somewhere into the 266. But let's see where our distribution is. And that's just going from this anchor to this anchor. So we got a buy signal on the 15-minute. So you have 247, 259, and then we have 250. So that's pretty much what we're looking at as far as where the resistance will be if we get a bounce. Now, if they get above this, that's where we start looking and saying, all right, we're going to start going to a deeper anchor. And that's when we're looking at it coming up to the 255, up to the 260. So those are our upside targets. But, if we look right here, we're on a sell signal with duration right here. It still has some room to go to the downside. So I wouldn't be surprised to see us test these lows here to 240.31. And if they break them, then we're probably looking at a move coming down to the 236. And let's see where was I? Hang on one second. Okay, here we go. So that this at 238.16 is the secondary. So this would be where I'd be looking if we saw more weakness to buy the IWM. And again, the target's going to be right up near these the 247.66 up to the 249 level. And again, you can see we have buying. So on Friday, we made a couple really, really decent trades on the spiders. And excuse me. So this was, let me just make sure I'm on the right date here. 20, yeah, the 27th. So we actually got long right at the 238. I think we took the 239s and it rallied up to 242. We took another quick trade. We got in, we made $500 in a matter of a minute and just got out because when you're counter trend trading like we are, because we're buying when we're getting liquidity buy signals. And again, another big thing. Look at all this buying going on down here. So when you get it though, when you can make a quick $500, you take that money and you run. You don't try to wait for a long trade, something that's going to make you 5 or 6 thousand. When the trend is down, you want to, when you get these trades and you make decent money, you get out of them. So we did that. IWM was just kind of nothing. We made the put position that we had covered our long position, but we had a couple long positions, so I think we lost a few $100 on it. It was nothing major. Overall, the fund lost like 1,200. Had really nothing to do with the trading we did today. The quantum stocks took it on the chin again. They're just look like the stocks that are, say, in the riskier assets like these are, just because they're going to be changing the world, but they're not really that profitable right now. They're getting sold off first. So this is happening. I'm accumulating down here. I'm gonna because whenever we got the pops up, I sold half of them, and when from there when it comes down, I buy that other half back. And that's all I'm going to keep doing until this rides itself out, and then from there we're going to be looking at these stocks going up 100, 200, 300%. So I'm not worried about them. It's not comfortable, but I'm at the getting to the levels where I am going to start buying back some of those shares that I sold on the pops. So with that, enjoy the rest of your weekend. Have a great day, and I'll talk to you guys in the morning.